So this was saying wages are up and also hours worked per week is up. They're slightly, but this is also saying it's putting more money in the pockets of people. And that's why you might see the bond market kind of, reversing off of this, because it's not good news for Fed cuts. And that's what we're worried about right now, or we're hoping for at some point.
Labor force participation rate, always a welcoming event. We want to bring more people in. It comes in at 62.4. This is a miss. This is the first real miss. That's a couple tenths light, both in the rearview mirror and against expectations. It equals the lightest read of the year, which was in February, to find a lower number. You're going all the way back to the last month of 2022. And finally, drum roll, please, we're going to look at what I call U6, the underemployment rate, because the actual employment rate I already gave you at 4.2 is considered the U3. So U6 comes in at 7.8. That means that we have back-to-back 7.8s. The lowest read was 7.5. That was January of this year. Interest rates are moving up. Listen, 139,000 isn't off the chart strong, but it's stronger than the market was looking for. And even though you can say that we're losing a bit of steam on job creation, what you can say is that you cannot say that it's happening quickly. And you cannot say it isn't accompanied by a mixed bag of other economic fundamentals. Some point to slower glide path, some point to better glide path. Interest rates on the week, and this is important, a 2-year close at 390 last week, so we're basically up close to 6 basis points. A 10-year closed at 441 last week. It's basically up 2 basis points. Pre-opening equities, they like this number. Back to you.
So that's what we're seeing in the headlines right now. So that's what's causing these things over here. So it's great news for the economy, the jobs market, wage growth, wage hours. But the problem is now the Federal Reserve is probably going to say, well, the economy is okay, because here's what we look at. The economy looks at these things right through here. And here's the numbers that we're going to go over. Economy at a glance. This is the federal funds rate. This is the rate that the Federal Reserve controls and sets. Okay, we'll go over that in a second. But here's what they're looking at. The Federal Reserve was created for 2 reasons. One, for price stability, aka inflation, and the other was to keep the jobs market at full employment, and that is the unemployment rate. So if you see the PCE,